Welcome back to the channel. Today we are diving deep into the changes in my P2P portfolio over the past month and reflecting on its performance throughout 2024. This is not just about short-term tweaks, it's also about seeing how a P2P lending portfolio evolves over an entire year. Whether you are just starting out or looking to fine-tune your strategy, this video will give you plenty to think about. Now, a quick reminder before we get started, this is not investment advice. What I am sharing is my personal experience managing a P2P portfolio. While these results are real, they don't guarantee you will achieve the same. Remember, P2P lending carries risks and you should never invest more than you are willing to lose. Alright, so let's jump right into it. Here's how my portfolio stands as of the beginning of this month. You will see changes in the portfolio amounts for each platform, showing where I've increased or reduced my investments over the last 30 days. Starting with Peerberry. All of my war-affected loans have been fully repaid, meaning my entire portfolio is now generating income. Peerberry has been a cornerstone of my investments for 7 years, consistently delivering solid returns while maintaining investor confidence. I expect this trend to continue into 2025. On Estate Group, my portfolio saw a slight decrease in December due to ongoing challenges with recovering defaulted loans. Recovery efforts will be crucial this year, but to be honest, I'm skeptical about ever investing on Estate Group again. RoboCash, on the other hand, has been a steady performer for years. While higher investments are tricky due to limited loan availability, it continues to deliver consistent returns, with all earnings reinvested to grow the portfolio. Esketit is an interesting case. It was one of the fastest growing platforms last year, but lower loan ability has been a recurring issue. This month, my portfolio here shrank slightly because I could not get my principal reinvested. While Esketit offers one of the best automated strategies in the industry, the lack of loans might push me to redistribute funds elsewhere in 2025. Fintown remains a standout platform. My investments in operational rental properties with steady monthly income have proven to be a strong alternative to high-risk payday loans. This approach minimizes the cash drag, and I'm continuing to increase my stake in their long-term loans. Cardpeer saw a decrease in December as I've decided to focus only on B-rated projects, while the platform remains a solid option for real estate loans in Lithuania. The availability of preferred projects has been limited. That said, the launch of their new mobile app has made the investor experience even smoother. Last month, I added more to my portfolio on Lande. This year, the platform made big improvements by sharing clear monthly performance reports and reopening the secondary market, which makes it easier for investors to sell their loans. The changes improve liquidity and make Lande one of the best platforms for agricultural loans, performing better than their competitor. Indemo has not seen much change in my portfolio recently. With the discontinuation of their fast-track program in December, future returns will come from discounted debt sold through their debt collection agency or the secondary market, which is expected to launch soon. Now let's look at the bigger picture. The bulk of my investments is with Peerberry, RoboCash, Fintown and Esketit, while Indemo, Lande and Cardpeer collectively make about 9%. Most of my loans are current with a slight decrease in defaults. My exposure to war-affected loans has been completely eliminated. Most of the loans in my portfolio are commercial loans, mainly loans to the Una Financial Group or the Aventus Group on RoboCash and Peerberry. I have also a good portion of my funds invested in short-term loans and rentals. Geographically, my portfolio spans 13 countries with the most exposure in Spain, the Czech Republic and Singapore. While many loans are unsecured, they are backed by guarantees or collateral like mortgages and machinery. In December, my portfolio grew to 98,223 euro, up 1.17% from November, generating 1,000 euro in interest last month. This offers a clear benchmark. If you are aiming for 1,000 euro in passive monthly income, you will need a similar portfolio size. My weighted average interest rate increased to 11.36%. The average investment per loan is 176 euro and the portfolio is spread across 556 loans. If you want a more detailed breakdown of my portfolio, you can find it on buymeacoffee.com/P2P in the link below. Now let's take a moment to look back at the past year and see how my portfolio has evolved over the 12 months. It's been a steady, balanced journey with investments growing on several platforms. The biggest increases have been on Peerberry and RoboCash, followed by Fintown and Lande. Peerberry has been part of my portfolio for 7 years now and RoboCash for almost 6. So growing my investments on these platforms was an easy decision. However, one issue with both is the low loan availability, which sometimes leads to cash drag. This means I have to manually reinvest my funds on Peerberry, which can be quite time-consuming. Escated has one of the best automated investment tools in the industry. It's quick, efficient, and offers great liquidity. However, like other platforms, it's been impacted by low loan availability. This has made it difficult to reinvest return funds from short-term loans, so my portfolio there hasn't grown recently. To address this, I plan to focus more on longer-term loans this year. Long-term loans, typically lasting 12 to 24 months, now make up a significant part of my portfolio. I find they work well for me because I don't rely on the liquidity of my P2P investments, and instead of dealing with cash drag every month, I would rather have my funds consistently invested over a longer period. Platforms like Peerberry and Robocash offer great opportunities for commercial loans, while Lande and Fintone provide plenty of long-term options as well. Fintone in particular has become one of my favorites last year. Their model is straightforward. Your investments are used to develop rental properties in Prague, where housing demand far outspaces the supply. Early bird investors can earn yields of 11 to 12% over 1 to 2 years, fitting perfectly into my strategy. Plus, the platform is still small enough to avoid cash drag, making it incredibly convenient. If you want to know more about Fintone, you can check out my visit to their headquarters last summer or read my detailed review. And if you decide to sign up, you can use the link on P2P Empire to get a 15-year welcome bonus. I've also added Indemo to my portfolio this year. Their business model, selling discounted debts for profit, is unique and intriguing. It's a smaller portion of my portfolio, but the potential for higher returns makes it worth testing. Not all platforms have performed well though. My investments on Estate Guru have dropped by nearly 25% over the past year. I've been disappointed with their performance and communication, and I'm hoping they improve their recovery rates in 2025. On Crowdpeer, my investments decreased by 43%. While it's managed by the same team as Peerberry, I'm hesitant to expand my stake in third-party real estate loans in Lithuania, especially since Crowdpeer has limited control over these loans. Right now, platforms like Crowdpeer, Lande, and Indemo remain smaller, more experimental parts of my portfolio. Meanwhile, I'm continuing to reduce my investments on Estate Guru. Looking at loan performance over the past year, things have actually improved. The funds tied up in war-affected loans have been fully recovered, and late or defaulted loans have also decreased. This shows a stronger overall portfolio performance compared to 12 months ago. There's been a noticeable shift in my portfolio toward long-term investments. Rental loans, discounted debts, and agricultural loans have grown, while short-term loans have decreased by about 7%. Geographically, my investments in Spain and Czech Republic have increased, while those in Lithuania have dropped by 18%. In terms of security, there haven't been major changes. I increased a little bit the portion of unsecured loans in my portfolio. Over the past 12 months, my portfolio grew by 25% and delivered a solid internal return rate of 11.42%. While that's not as impressive as the S&P's 500 24% growth or Bitcoin's 123% surge, P2P loans offer stability and low correlation with stocks and crypto, making them a valuable part of a diversified portfolio. If you want to dive deeper into my portfolio's performance, all the details are available on P2P Empire. If you are tracking your own investments, let me know how you have performed in 2024 in the comments below. I would like to get your input. So that's it from me today. If you found this video helpful, don't forget to hit the like button and subscribe so you don't miss out on future updates. Thanks for watching, and I will see you in the next video.